Visa is one of the most powerful companies most people barely think about. You might not see the Visa logo often, but it's behind millions of payments every single day. Today, we're doing a deep dive into Visa. The business, the growth story, and the risks investors should understand. Visa doesn't issue credit cards. It doesn't lend money. And it doesn't take credit risk. Instead, Visa runs a global payment network. It connects consumers, banks, and merchants. And it earns a small fee on every transaction. That business model is incredibly scalable. As spending grows, Visa grows, without taking on significant balance sheet risk. Every time someone swipes a card, taps a phone, or pays online, Visa may earn a fraction of that transaction. Individually, the fees are tiny, but at global scale, they add up fast. Visa processes trillions of dollars each year, across nearly every country in the world. That reach is very hard to replicate. The shift from cash to digital payments is ongoing. Many countries still rely heavily on cash, but digital payments keep gaining ground. As cash usage declines, electronic payments increase, and Visa benefits from that trend. This is a long-term structural shift, not a short-term cycle. And it's one of Visa's biggest tailwinds. Visa's network benefits from scale. More users attract more merchants. More merchants attract more users. This creates a powerful network effect. The larger Visa becomes, the harder it is to compete with. Banks want access to Visa's network. Merchants want customers who pay with Visa. And consumers want convenience and acceptance. That loop reinforces itself, and it strengthens Visa's moat over time. Visa also benefits from global commerce. Cross-border payments generate higher fees, and international travel continues to recover. When people travel, spend abroad, or shop from foreign merchants, Visa earns more per transaction. E-commerce growth also supports Visa. Online spending continues to rise globally, and most online payments rely on card networks. Visa doesn't need to predict trends perfectly. It just needs commerce to keep growing, and payments to remain digital. Another advantage is Visa's cost structure. Once the network is built, each additional transaction costs very little. This leads to high operating margins and strong free cash flow, which Visa uses to reward shareholders. Visa regularly buys back shares and pays a growing dividend, while still investing in technology. That balance appeals to long-term investors. Growth combined with consistency and financial discipline. Before we go further, a quick disclaimer. This video is for educational purposes only. It is not financial advice. Always do your own research and consult a professional if needed. Now let's continue. Visa continues to invest in payment technology, including contactless payments, tokenization, and fraud prevention. Security is critical in payments. Trust is everything, and Visa spends heavily to protect its network. As fraud becomes more sophisticated, so do Visa's defenses, which strengthens confidence in the system. Visa is also expanding beyond cards into real-time payments and business-to-business transactions. These areas represent large opportunities, especially as global payments modernize and legacy systems are replaced. However, Visa is not without risks. Regulation is a key concern. especially around interchange fees. Governments may push to reduce costs for merchants, which could pressure fees over time. This is a risk investors should watch. Competition is another factor. Fintech companies continue to emerge, offering alternative payment solutions. Digital wallets and account-to-account payments are growing, but most still rely on card networks, at least for now. Visa often partners with new platforms, rather than competing directly, which helps it stay relevant. Economic slowdowns can also impact Visa. Lower consumer spending reduces transaction volume, especially in discretionary categories. However, Visa does not face credit losses, because it does not lend money. That makes it more resilient than banks. Over long periods, global spending tends to rise, and Visa rides that growth. Valuation is something investors must consider. Visa often trades at a premium because of its stability and margins. It may not double overnight, but it compounds steadily over time. That's the appeal. Visa is not a flashy company. It doesn't rely on hype. It relies on infrastructure. And infrastructure businesses can be powerful when they sit at the center of global activity. As economies grow, as populations become more digital, as commerce moves online, Visa remains deeply embedded, quietly processing transactions and collecting fees at scale. The long-term thesis is straightforward. More digital payments, more global commerce, more transactions, and Visa participates in all of it. Visa may not be exciting day to day, but consistency matters in investing, and few companies are as consistent. Understanding this business is key, because simplicity at scale is powerful, and Visa is built for scale. That's our deep dive into Visa. If you found this helpful, like and subscribe. Thanks for watching Digital Wealth Code.